Hey everybody, it's me, Vienna, the insurance exam teacher. Today we're going to go over accidental death and dismemberment policies and accidental death and dismemberment writers. So if you've been studying and you're like, wait a minute, AD&D, accidental death and dismemberment, wait, I thought that was a writer, I thought that was a policy, or maybe you just don't know that there are two separate kinds. This is the video you need to watch so you could know what it is, what they are, and how they work. All right, so give me a minute and let me share something with y'all. So this right here is the PDF that I made specifically for us to share this information with all of y'all. So again, first thing to know is that there is an accidental death and dismemberment policy, a standalone life insurance policy, and a rider. So let's get into it. Before that, let me talk a little bit about my insurance course. So if you are studying to take your insurance exam, guys, I've got a course. I've been helping people for many years now pass the insurance exam on their first try. I break down this information super simple, super easy to understand, and I've been doing this with one-on-one tutoring sessions as well as my recorded classes and my Saturday group courses. So I've got two options for the courses that y'all can look at. It is right there on that website, insuranceexamcourse.com. First option, my life and health insurance exam course. You're going to get access for 60 days to all of my videos that are recorded. You're going to get access to it 24/7, PDFs, study materials, practice questions with the detailed breakdowns and informations, as well as study strategies and routines to really help you understand and remember all of the information you need to go and pass your insurance exam on the first try. I don't care if you've studied with other people, other programs, and maybe you're just frustrated, or if it's your first time studying, I will be able to help you pass this exam. So that is my first option. And then my second one on the other side, the Life and Health Insurance Exam Tutoring course, you get all of the same things for 60 days. Plus, you also get a one-on-one 1 hour tutoring session where we will jump on Zoom one-on-one and specifically study what you want, what you need, any bit of information you're curious about, questions you have. We will practice the questions that you'll see on your test, more than likely extremely similar. Of course, nobody can guarantee what you're actually going to go see on the test. So if anybody ever tells you you will see this, you won't see that, don't believe them. They are probably lying to you, but we can definitely see similar questions, study the information, study the concepts, the subjects that you need to study to make sure you understand them and to make sure you pass your test. I've helped so many people do this, and guys, I love doing it. And if you're not interested in a course, or maybe you already took a course or whatever, you just want a couple of one-on-one sessions with me, that's also going to be an option. I do tutor one-on-one. So check it out right there at that website, guys, insuranceexamcourse.com. Let's get into the first bit of information. All right, my other website, and it is going to be in the description down below in the video, guys, is the insuranceexamteacher.com. You can go to both of them. You get some great resources, some PDFs, the study strategies, the study material, everything broken down very specifically, very easy to understand. I promise y'all. So check both of those out, guys. And all right, let's get into it. So accidental death and dismemberment policies, AD&D. That is how we call it, how we refer to it, our short term for it. And like I said, there's a policy, an accidental death and dismemberment policy, and an accidental death and dismemberment rider. Let's look at the policy side first. The policy, what is it? It is a standalone life insurance policy that will only pay if the insured dies in an accident and or is dismembered to some degree. So guys, your life insurance policy, your accidental death and dismemberment policy, they're super cheap because they are only going to pay, again, if you die in an accident. So no natural causes, no murder, no suicide, none of that. Well, yeah, no, not in this case. So your policy only pays if your customer passes away in some type of an accident and or is dismembered in some way or another. So that is your policy. Now, if your customer becomes dismembered somehow, loses an arm, loses their sight, a foot, any kind of dismemberment, but does not die, the policy pays half of their death benefit. Okay, guys? So that right there, super important to know, super important detail for your AD&D policies. How much does the customer receive when they pass away? Sorry, how much does the customer receive when they are dismembered but do not pass away? Half of whatever their benefit is. If they've got a $100,000 policy, they get $50,000, right? That way they can go to the doctor or whatever they need that money for. Now, on the other side, the writer, this one is more commonly talked about, comes up a lot more on your exam. So I need y'all to really understand your AD&D writer. First of all, a writer, it is additional, it is optional. You do not need to have your AD&D writer on a policy. I need you to understand that when it comes to writers, they are always additional, they are always optional. And because of that, if somebody decides to add a writer to their policy, that premium is going to go up. We're going to raise the rate and we're going to charge them a little bit more for it. Typically, it's like $2 or $3. It really isn't that much, but it is going to be a little bit more. Some companies may throw them in there just to make their policies a little bit more appealing and whatnot, but it's, for the most part, going to be an extra $2 or $3. So now, what is the AD&D writer? Your accidental death and dismemberment writer. You can add it to your term life insurance policy and or you can add it to a whole life policy. Does not matter what type of policy you personally have. You can add an AD&D writer. Can you add the AD&D writer to an accidental death and dismemberment policy? Yes, you can. All right. So don't get them confused. All right. These are totally separate things. So with your AD&D writer, it works in the similar way as the policy. It is going to double. It doubles the coverage amount if your customer dies in an accident or is dismembered in some way. Customer had a heart attack, not going to double the benefit. Customer was murdered, not going to double the benefit. Okay. So there are other circumstances where the benefit does not get doubled. In order for the benefit to get doubled for the beneficiary, the next important thing is to know that they have to die within 90 days of the accident. They die on day 91, the beneficiary receives the regular coverage amount. So if your customer has got a $200,000 policy and the customer dies on day 91, their beneficiary only gets that $200,000. All right, so that is the main thing to know about that. Also, super important fact that not a lot of people talk about, not a lot of people know, is that it expires at the age of 65. Sometimes your exam is going to throw that in there and it's going to ask you and tell you specific dates and times and stuff. And you need to make sure that you're paying attention to that specific detail. That's going to come up later. Right, guys? So expires at the age of 65. The customer has to die within 90 days of their accident or incident or whatever. And if they don't, we just get paid the regular amount. Doesn't matter if the customer has been paying towards it for who knows how long. All right. So that right there is the basics between your policy and your writer. Okay, guys, this is not a super complicated concept. Rewatch this if you have to, screenshot this if you'd like. Go ahead and do what you need to do. Let's talk about the writer still. Okay, so double indemnity writer, what is that? Why am I mentioning this? Because your AD&D writer, accidental death and dismemberment writer, is also known as your double indemnity writer. And the exam likes to try to trick you with this. So in an answer option, it might say double indemnity writer instead of accidental death and dismemberment writer. It may ask you, what does your double indemnity writer do? Which writer doubles the benefit for your customer if they die in an accident or are dismembered? And they're going to say double indemnity writer, or they could say accidental death and dismemberment, right? The exam loves to interchange terms. So be on the lookout for those synonyms and those different terms for the same things. Big tip right there for y'all guys, big testing tip. Okay, so let's talk about the word indemnity because this is another bit of vocabulary for you. The word indemnity literally means unknown payment. We don't know how much is going to get paid out. The double indemnity rider, we don't know if it's going to get used. We don't know if the customer is going to die in an accident, is going to be dismembered, or if they're going to die due to a natural cause or some other reason. So it might get paid, it might not, we don't know. We don't know. So it's an indemnity rider because we don't know if it's going to get used, even though the customer is paying for it for however long they may be paying for it. Also, again, if the customer dies after the age of 65, it's not going to get paid out. It's not going to get doubled. We don't know. We don't know if the customer is going to die before 65 or in some kind of an accident or be dismembered somehow. So keep that in mind. The word indemnity, and anytime you see it in life or in health insurance, for those of you who are taking your health insurance exam, anytime you see it, make sure that you relate it to this basic definition, unknown payment amount. So when you hear the word indemnity policy, I want you to automatically think of a health insurance policy, because with a health insurance policy, we don't know. We don't know how much is going to get paid out. We don't know who's going to pay what based off of a big bill that may be running all year long. Because I want you to think about this, shifting your mind for a minute to health insurance, because this is also important for those of you taking the health insurance portion of the test. And those of you who are only taking your life insurance portion of the test, you need to know this too, because they will throw this term in the exam as answer options. So indemnity policy equals health insurance policy. Indemnity policy equals health insurance policy. Indemnity, health insurance. Why? Indemnity equals unknown. When you go to your doctor, you're going to be like, my stomach hurts. The doctor's going to be like, okay, let's figure it out. We're going to do test A, B, and C. And now your health policy is going to pay whatever the doctor fee is for the visit. Maybe there's medicines after test A, B, and C, but we're going to pay for 3 different exams. You go back, your checkup, your follow-up for them to tell you what's wrong. And they're like, there's nothing wrong with you. We need to do 3 more exams. Now your health insurance company is going to pay for 3 more exams, a second visit, more medicine until they figure it out, right? Until the doctor has their full bill of whatever they did to help you. And at the end of the day, we don't know if that may take 2 visits, 20 visits, all year, or whatever. And also, sometimes people have awesome years, right? Where they're just super healthy and don't go to the doctor at all. And they're just paying their premium the whole year, don't go to the doctor. So we don't know, right? We don't know if we're going to end up paying or using a health insurance policy this year. And when we do, we don't know what that bill is until the doctor's like officially done with us. And even after that, customer pays a percentage, doctor pays or insurance company pays a percentage. And until we know that breakdown of the bill, we don't know. It's indemnity, right? So an indemnity policy equals a health insurance policy. A valued policy is a life insurance policy. Those two are the flips. Value, because we always know how much a life insurance policy is valued for. In a term policy, it's going to be the amount of the death coverage. In a whole life policy, it's going to be the bigger of the two. So if your coverage is bigger, then it's the value of the coverage. If your savings account is bigger in your whole life insurance policy, then it's the value of the savings account, that cash value. So keep that in mind. And if you want more details on that and that information more broken down, I do have another video where I just go over the differences between term policies and whole life policies. I will link it down below, but definitely watch that one because I break down all of the types of life insurance policies down to the tiniest detail, as y'all can tell. And also, guys, keep an eye out for the triple indemnity rider. Your triple indemnity rider, exact same thing as the double indemnity rider, except instead of doubling your money, it's going to triple the money for the beneficiary when the customer dies in an accident and or is dismembered. Also costs more money, also optional because again, it's a rider, right? So you can pick your double indemnity rider, which is your AD&D rider, Or you can pick the triple indemnity rider, which is only called your triple indemnity rider. All right, guys, so make sure that you understand these concepts. And if you see that triple indemnity rider out there as an answer option, it typically comes up as an answer option. Go ahead and just be aware that it exists, that it's there. There's usually no questions on that. So I don't even want you to worry about it, but know it exists. All right. Let's go over some practice questions, guys. And just so y'all know, I do have a PDF that looks just like this with 50 insurance exam practice questions. I'm also working on the one for health insurance, but the breakdown is just like this. Right now, we're going to go over 2 insurance exam practice questions. And the topic, of course, is AD&D writers. All right, so L purchases a $100,000 life insurance policy with an AD&D writer at the age of 42. At the age of 67, he is involved in a car accident and is taken to the hospital, where he dies 9 days later. How much does L's beneficiary receive? A, $0, B, $50,000, C, $100,000, or D, $200,000. Pause me for a minute, think about it. I'm gonna give you 5 seconds so you all can pause me, but I'm gonna go. All right, you should have paused me, or you should already have your answer at least. And I'm gonna scroll up and we are gonna see what the answer is. No cheating. All right, so I hope you chose C. I hope you chose that the customer, the beneficiary, will receive $100,000, which is the coverage amount. So here, the question, let's go over why this is the answer option. That is the actual answer. So at the top, you're going to see in red, that is the correct answer. And then the explanation as to why the rest are not the actual answers are down below. And this is how I have it broken down for every single question in my course and in my PDF. So let's go over it though. So the answer is 100,000. Why? It tells us in the question that he has a $100,000 life insurance policy with the AD&D writer. So number one, we know this is not an accidental death and dismemberment policy. We know that this is the one where we're going to get that $100,000 possibly doubled. So not a policy, we scratch that out, but a writer. And it doesn't matter if it's a term or a whole life in this case. It doesn't even tell us, we're not even wondering. At the age of 67, he's involved in a car accident. So at the age of 67, this is that type of question that wants to try to trick us to say 200,000. If you pick 200,000, I know why. You're thinking AD&D writer, 100,000, double it, right? Not in this case because he's 67, so it already expired. And then it goes on to tell us that he crashed but died 9 days later. So he was in the hospital sick for 9 days. They tried to save him, but they just didn't. Why is that important? Because again, we have that time frame on the writer. The customer has to die within 90 days. And if he doesn't, then it's not going to double the benefit. In this case, he did. However, he's 67, so it is expired. It doesn't even apply anymore. That is why the family only receives that $100,000 benefit. Okay, guys, so that is why it is C. That is how I want you to think about these questions, how I want you to break them down and look at them. So it is not 0. It does tell us there is a life insurance policy. It does not tell us it expired. It does not tell us it was a term or anything like that. And he got it when he was 42. So we know right off the bat, it's not going to be 0. The family is receiving something because that is what the question's asking you. How much is there? Are they receiving? And while 0 is technically an answer, because literally it is, it's not going to be, it's not an amount, right? So B, since the question states that this is a writer, we know that he does not qualify to receive half of the benefits. So if it were a life insurance policy, a accidental death and dismemberment policy, and the question was flipped around, it told us that he was dismembered somehow and that he lived. The exam usually likes to say that the customer goes blind. Then he would get that $50,000 benefit, that half of his coverage. So remember, but that's on a policy, not the writer. C is our answer. We already talked about that. Oh, I just saw that I put this here. So that should say D. D, okay, so again, D is not gonna, it's not gonna be 200,000 because it is expired. And even though he did die within that 90-day time frame for the writer to pay out, he is 67, so therefore it's not gonna double that benefit. So I hope you got this right. And if you didn't, I hope that my explanation helped. And if it didn't, pause this, read this a couple of times, and I promise you, you will understand the writer, how it works, and also why that was the answer in this case. Now let's go over one more question. All right. T and S are named co-primary beneficiaries on a $500,000 accidental death and dismemberment policy insuring their father. Their mother was named contingent beneficiary. 5 years later, S dies of natural causes and the father is killed in a scuba diving accident shortly afterwards. How much of the death benefit will the mother receive? All right, guys. So A, $1 million, B, $500,000, C, $250,000, or D, $0. All right, I'm going to give you, again, 5 seconds. I'm going to count it down. Pause me, think about it, figure it out. All right, I'm going to scroll over. I hope you have your answers. All right, so in this example, right here, the mom is going to get $0. The mom is getting $0 because she is the contingent beneficiary. She's not the primary. She is the backup. A contingent beneficiary is the backup. In the question, it does say that the policy is an accidental death and dismemberment policy. It does not tell us how old the dad was when he passed away. Doesn't even apply in this case, honestly, because the age belongs to the writer, not the policy itself. All right. So $500,000 is your death coverage. T and S, let's just say they're siblings, are the primary beneficiaries. Mom is down here in the back, right? So it's like TS and mom. And one of the siblings passes away. We still have a co-primary beneficiary alive who becomes your 100% beneficiary. So now we have a beneficiary and a backup contingent is mom. So when dad dies, the who's the one that's left? T, who's left alive, is going to get the entire amount of money, and mom is going to get $0. But guys, in this case, we have a dismemberment policy. So had this question been flipped around and said that the father maybe lost a limb, maybe a shark took him in the scuba diving accident and he lost his foot or something, in that case, then dad would have received $250,000, right? Because this is a policy. So think about the questions when you're looking at them, break them down like that, and then think about, okay, as you're practicing, what would make this different? What would be the changing if I change this word or change that word? Because that is how the insurance exam really works sometimes, and it comes down to this word and that word, right? So here again, we're talking about a policy, not the writer. So how much is the beneficiary going to receive in this case? It's not going to get doubled. So it's only going to be that $500,000. However, we asked about mom. She's our contingent, our backup beneficiary, our second in line. In that case, the second gets $0 because we still have our beneficiary alive. All right. So that is how I want y'all to break them down, guys. And if you thought this was helpful, definitely like this video. Comment down below. And by the way, in the description of this video, I do have a PDF with 50 insurance exam practice questions, just like the ones that I just showed you and went over with you all. So if you're interested in that PDF, go down below to the description in this video. Like this video. Don't forget to subscribe to my channel and comment down below whatever your thoughts are and what questions you have. What do you want me to review and go over on another video? And check out my other videos too, like I said, and I will link it below in the description box as well. Check out my video for the whole lives versus the term lives, explaining the types of life insurance policies where I've broken them down in major detail, as well as my non-forfeiture videos. That is a topic right now that's kind of all over the place on social media. So if you want the correct information and a free downloadable PDF where I broke them down in details, go to that non-forfeiture video as well. Until next time, guys, I'm Vienna, the insurance exam teacher. Thank y'all for sticking around with me right now. And I will see y'all in the next video. Good luck on your exams.